Today is Thursday, January the 23rd, and you can see that from the open, we rose to the Globex low, and we had trouble breaking the Globex low, apparently, until someone in the United Nations said that there was no global scare about the coronavirus, in spite of the fact that 19 people have died. And yet the president says that there's no problem. We're perfectly safe until the first person lands in San Francisco, right? Anyhow, we are still moving up after market. The market seems to be placated by anything that the president says. Let's look at advancers and decliners. How do I get rid of this? Here we go. No, that's not it. Anyways, advancers and decliners were pretty much flat. Volume, really strong volume. Do you remember it wasn't more than a month ago where we were complaining that the volume was low? Well, that is not the case anymore. Volume is driving the market higher. But the stock market breadth still moved downwards, a little bit lower than its last low. In theory, it should be going down to one of these two levels here, because that's what the market does. Money moves in and out of the market in waves. So let's see. The S&P finished the day up 0.11%, but the key thing is it finished up at the top end of its range. As we saw towards the end of the day, the market started to move up. We are now starting to come closer to the cloud. Could we be heading for one of these or one of these? So we've got to make contact with the cloud at some point. So it's either going to be higher, lower, or flat. But we've got to make contact with the cloud. We have to come back and test the cloud, because that's just what the S&P does. It never gets too far away from the cloud. And when it does, like down here, it has this massive influx of buying, and it moves right through the thinnest part of the cloud. So let's continue to keep an eye on that. But of course, this A, B, C, D that we explained yesterday proved to be rejection yesterday. And let's just see how long it takes us to come back and test that and see if we can get through it. Apple's getting closer to 320. What a great stock. I cashed in my 310 calls and made about $1,200. But I turned around, because I had short 315 calls, I turned around and bought the stock for two reasons. I'm not going to make any more money in this position than if I had the call vertical. It was going to work out to exactly the same. But hopefully I'll be able to manipulate my short February 315 calls in such a way that I'll still be able to take part in the 70 cents dividend or whatever that they're going to announce next week. Amazon, still struggling, but the good news is that we may be getting to the oversold area of this faster EMI, but the slower EMI is still moving down. But there'll be some periods of up and down, but overall, Amazon should be going down, and that is what we're seeing. Of course, earnings are coming next week, so Caterpillar, outside of this channel, but we've seen it outside of the channel before. It did rebound back towards the top of its day. Its SMI, let's look at its, well, we're looking at the other SMIs, so let's go to this one. Its SMIs are still long-term down, short-term could be coming up, but the overall trend long-term is still down. AT&T down. Tesla only up $1.64. This 200% is proving to be resistance. And look at the volume. Yesterday we had a lot of volume on a day that finished just below the middle point of the range. And our biggest red days have been big volume days, and lesser on the green days, lesser volume, and today showed that the institutions really weren't playing. Whirlpool, I got out of it yesterday, but it's up $4 today, but I don't care. I'm still out. The longer term SMI shows that it's going down. The faster SMI does show a bounce off of oversold, and it's on its way up. Again, earnings next week could change everything. Where are we going from here? Let's look at the volatility index, which is still reading very, very low levels, no fear, and the volatility index is at the bottom. Let's look at other times when we had the volatility index. Look at the bottom. Look at here, like here. We had the slow-moving SMI at its bottom for a long time, and then it started to move up, and so did the volatility. And then the SMI went screaming up on the short term. So we could experience a few more days, a few more weeks of this low volatility, but some scare is going to come along and it's going to bump the volatility up, and that's what we're keeping an eye on. I still think that 33.36 is going to be resistance, and we don't break through this for a little bit longer. Now, next week is the big powerhouse week of earnings, and after that, the market is going to decide if earnings were good enough that we're going to drive forward optimistically to the next quarter earnings, or whether we're going to start with profit taking.